I'm going to go over a few interesting stories that maybe will help you in your judgment in the future for different things, especially with the metals. But just want to actually talk a little bit about waste in the military in our blue water green Navy. What they have today is they're doing a effort to go to green fuel, so you're using in the Navy fuel that's over $400 a gallon because it's produced by algae. And talk about wasteful spending when you have a very tight budget in the military and in the government itself. In other words, diesel fuel is like $3 and something a gallon for the Navy, and they're spending well over $400 a gallon because it's from an algae. And you know what the deal is there. That's basically somebody's getting a hookup there for a contract to produce biodiesel for $400-something a gallon. And guess who's paying for it? The average American taxpayer. There's a number of things out there that are very interesting that say that mismanagement and a number of other things are actually going to spell the end for the United States in its current form. Now, I also want to talk a little bit quickly about Social Security. Not that I ever expect to ever get a check from that thing in a million years, but there's actually, what the rule is, every 3 years, they go by the last 3 years of interest rates, and recently, it was doing about 5%, but now they had to roll over some things, and it's producing less than 2%, because Bernanke's policy of the zero interest rate policy is continuing, and it's been continuing for the last few years, and it's going for at least another 2 years. So what's going to happen there is that Social Security is going to produce very little income. So it's going to be coming up to a crunch fairly soon. So that's another reason to actually get into the metals. These are actually the people that should be getting into the metals, the retired people. They should be taking a little bit of money and do maybe the dollar cost average, but maybe not trying to buy it at the high, but just try to buy a little bit here and there, because that's going to save people on fixed incomes. It's something that's not actually being told enough, but it looks like Social Security is going down the tubes in several years, say 3 to 5. But the writing's on the wall because the formula is, now that they have to roll things over, they're going by the average of the last 3 years. Well, it's into the low interest rates now. I want to point out some other things. This was something very good. This is a chart showing several items. The S&P 500, the Commodity Research Bureau's index, which is a whole bunch of commodities, right? And crude oil. And this is a major beef I always had with the people that were on its YouTube channels pushing silver left and right, like it's got a mind of, well, it does have a mind of its own, obviously, but it doesn't go by other laws other than the same kind of market forces that are going on with everything else. I think the silver market is manipulated up to a point where maybe the volatility is the manipulation. That might be. And volatility scares people out in the market. So maybe that is the actual manipulation. But you look at this, and it's all really based upon QE. QE was going to be ending around beginning of June, starting to end. And what happened at the end of April, say around May 1st of 2011? You got this dividing line here. The first black line is the S&P. Things were holding up okay a little bit. It looks like it made a double top. Then it took a nosedive in the summer. The commodities all went down. This is the commodities CRB. That's the Commodities Research Bureau Index. They all went down. Crude oil, same thing. Crude oil very closely follows the S&P. If you notice this blue line on the bottom and the black line on the top, there's a very good correlation between the two. It's not a perfect correlation, but it's a very good correlation. So, to get things heating up again, and these are the stock prices everybody's investing in, you're probably going to see crude oil go up. Probably going to see it start going back up again. Now, this is a chart showing the 10-year Treasury yield going all the way back to 1790. Now, this really puts things in perspective very, very, very well. Because the only thing that knocked down all the precious metals is when they raised the interest rates almost to 20%, right? They were like up to 18%. That was the only thing that knocked down the metals. They can't do that anymore. The next time the metals, I don't know what's going to happen, to tell you the truth, in a very long range. See, the part that, you know, everybody in their mind has this fear is that if the currency's imploding, what do you do as far as trading your metals in? And, you know, my recommendation is if you start getting major gains, start selling some of it off in pieces. That's just the most practical thing you can do. Because you always need extra cash on the side. US dollar cash is what you buy things in. You know, as you see some serious gains, start selling some off in pieces. If you're very, very smart and lucky, it would be great to, you know, and obviously this is a card game, you'd be screwing over the rest of the people. But, you know, if you sell at the top and you buy back at the bottom, yeah, you will move ahead into the billionaire range inside of no time, right? But obviously that's not going to happen with everybody. The common sense thing to do is to sell off in pieces. But when we're looking at this 10-year Treasury yield going back all the way to square one, you could see where it's been. It's never been raised this high. It's never been up to 18%. And you know what? They can never do that again. They can never do that again. Once the metals start heating up again, and they will, they're not going to be able to bring them down, except maybe through margin rate increase and stuff. But I mean, they're not going to be able to knock the major trend down. So when we start seeing, you know, $6,000 gold and stuff like that some years from now, it can even be going up higher. So I don't know what's going to happen that far out. But the scenario today, they can never do this again. Absolutely never do this again where they're going to raise interest rates that high. They're going to have to keep them low. So once the metals start taking off, that's it. It's done. Now, this is a very interesting chart because this is the Commodity Research Bureau's index. And this is on a yearly. You know, everybody's fixated on silver, right? And, you know, back in December, at the end of December, silver had a low there. It was around 26 something. Also here at the end of September, it also had a low. But you know, you look at this overall commodity index, the whole thing has been dropping even worse in June. So, you know, the thing is, usually with the commodity index, it's kind of going along with a lot of things. You might see the commodities, you know, now they're starting to spring back up a little bit. But, you know, that's when you're seeing all the commodities go down like that, that means there's a slowdown in industry. And when you're seeing crude oil go down, that means the S&P is going down. And that's exactly what's going on. I mean, things start springing back a little bit in the last couple of days. But, you know, that's been some talk about, you know, problems in the euro being resolved and all that type of stuff. And, you know, a couple little hints about Ben Bernanke possibly doing QE. You know, he's talked about that last week. But, you know, this chart's a heck of a lot more interesting than if you're talking about just the gold and silver chart. Because this is telling you what's going on in the commodities world in general. So, you know, we might have hit a low here. We might have hit the low. And that might have been it. I don't know. You know, the only thing I'm thinking of that's going to drive it down, and it could be a very fast drive down, is an event that comes up that shocks the world. You know, we had things like 9/11 before. We had the Japanese tsunami before. There could be this outside event that could shock the world and that could bring down the markets even more. I somehow have this tendency to think that that's going to be coming up in the summer. You know, I mentioned the stuff about the 2012 Olympics. I don't know about that. That seems a little crazy to me that they would even forecast something out like that. But there's a lot of stupid circumstantial evidence to kind of lean towards that way. I don't know. That seems a little crazy, but there could be a number of different things. You know, like Iran recently talked about, they have missiles now that can hit, Israel. So things could be starting to heat up again. So that could be driving up, fears, which drives up gold. So, but the next time around, they're not going to be able to do this with the interest. I know a lot of people do know this stuff, but just look back. I mean, they talked about, I know a lot of people talk about what they did to the interest rates, and they raised the interest rates, and they knocked down gold and silver back in 1980, right? But, that's what actually brought everything down again. People moved their money out of the metals. So that broke the bubble. But the thing is, they can't do that anymore. And if you're looking back to a chart that goes all the way back to 1790, this is the only time they did it. And with all the debt we got today, they can't do this. They can't do this. It's impossible. It's impossible. So the next time that we see gold start taking off again, right now it looks like it's pretty much underwater. But, next time you see it taking off, I'd be very cautious even where you start selling when it hits an all-time high. I'd be cautious. I wouldn't try to dump the whole thing. I'd do it in pieces. That'd be my recommendation, because I don't have a 100% crystal ball or anything. And actually, I couldn't tell the world what to do, because if the whole world jumped on one side, it basically ruins it. So the simple strategy is to just sell it in pieces. But wait till it gets about $2,000 an ounce. You want to sell a little bit. Go ahead. That makes sense. Silver gets well over 50, sell a little bit. Gets over 60, sell a little bit. Gets over 70, sell a little bit. But keep the majority. But that step-by-step rule is probably the best, safest route to take. You're not going to actually make major gains, but you're going to secure a few profits here and there. And I think that's the most practical way.